Hi, I'm Ross Healy, the Chairman of Strategic Analysis Corporation. Welcome back to Friday Focus, our SVA in Action series. Well, the market's barely recovering from Donald Trump's initial attack on both global trade and his domestic miscreants when it starts up again. So let's take a look at the S&P and see where we stand right now. Well, when I ended our Fang Friday series, the Standard & Poor's 500 was right up at this yellow line here, which is its low super growth price. That's 4.5 times book value. And that, by the way, was the peak of the Standard & Poor's in the year 2000. So the market had recovered all the way to that peak again. And by the way, recovered from where? Well, it started in 2020, right down here at 2 times book, which we call the growth price. That initial attack on the global economy has knocked the Standard & Poor's back down one breakpoint where it found its footing and has rallied again. Unfortunately, we thought that we had 90 days to clear things up, and it turns out that we had barely 5 weeks before it all started again. Trump has just launched a new 50% tax tariff war against Europe, which leads to me to the question, where else is he looking? And secondly, that big, beautiful tax bill of his is fundamentally a catastrophic war on the U.S. middle class and indeed the solvency of the U.S. economy overall, pushing the U.S. quite literally towards a condition of bankruptcy that I laid out in my monograph, Black Hole Economics, which you can obtain by Googling the same name. I'd like to keep updating that monograph, but unfortunately, the fundamentals are changing so fast that it's really difficult to keep up. With this latest attack, Apple's come under attack. Harvard, the judiciary, is now a key target. Is no one safe? Are we going to have massive tax cuts, and what's that going to mean for the solvency of the U.S. and therefore the long-term outlook? Unfortunately, I will have to tell you, it's not promising. Looking at that S&P 500 chart again, where are we heading now? Quite frankly, I fear the worst. But we need to see how the U.S. and the global economy hold up. Hopefully, you got through that first setback, notably in the growth stocks, as I had warned you of top there. Our clients have actually come through quite well. Our model portfolio is up nearly 11% for the year, so we have avoided most of the problems so far. With Trump's double war, now, that setback may not have been enough, however, to take all the risk out of the market. And if we are going to get more market weakness, you are going to need to be able to handle your portfolio in what may be a market setback or indeed a bear market. So next week, what I'm planning to do is do a feature on how to handle a market setback, and indeed, perhaps, how to handle a bear market. Now, a heads up, my book, Inside the Market, will be coming out fairly imminently. We have not priced it yet, and it will probably be available in 2 formats, one for a Kindle and the other in printed format. I would remind our viewers that SVA, structural valuation analysis, is a balance sheet-based approach to the market which merges fundamental and technical analysis. And those principles apply to all stocks, in all stock markets, in all jurisdictions, and using all accounting systems that we have ever worked with over the past 30 years. I think when you read it, you will find that the stock market is much more transparent than most investors are aware. If you'd like to learn more in the shorter term, please go to strategicanalysis.ca. In the meantime, have a good week, and I will see you next Friday.